So in this video, I'll be sharing the knowledge that I've gathered over the 6 years of trading in the financial markets of the correct way of identifying order block. Now, it's very important to be able to identify order blocks and the correct significant levels, as it's basically your foundation or your key levels of support and resistance, or your supply and demand levels where you expect price to hold and bounce off of, giving you a reaction. So if you're not able to identify it correctly with a high probability, you will be facing a lot of stop loss hunts, maybe manipulations, and even placing your stop loss in incorrect places where your level is invalid. Now, for my strategy, order blocks are mainly used as levels of supply and demand, where I can then look to take trades off of expecting a reaction off of those significant levels. Now, for my strategy, I usually operate in a 3 time frame correlation rule, which basically means I need one time frame, ideally the higher time frame, to be my directional bias. Then I'm looking for my significant level time frames, which I like to call the structural time frames, where I'm identifying the order blocks. So we'll be mainly focusing on the order block time frame, which is the structural time frame, which is the medium term time frame, such as the hourly or the 30-minute, and then ultimately you will be moving down to the 5-minute time frame, which is your entry time frame. Now, this is discussed in a lot more detail in my structure-based trading course, where I go through my trading strategy from A to Z, giving you a step-by-step guide on exactly how you can become profitable. But in this video, we'll be specifically focusing on order blocks and how you can capitalize off it. Now, a very easy and simple rule which you can follow to identify these order blocks is by identifying the last candle before structure was broken to either the upside or the downside. So a very quick example I can show you straight away will be the last bullish candle, in this case, before we see that push down, breaking structure to the downside, as you can see, which we got right over here, highlighted in this red line. So a clean order block has been identified. Price then comes back into this level, giving us a bunch of weakness, and then eventually that reaction to the downside. Now, another example of this could be, again, another bearish example right over here, where you got the last opposite candle, which is the bullish candle, before we break to the downside. And it's important to highlight, it is only valid as an order block if we're breaking structure to the downside for a downtrend. Now, similarly, an uptrend will also work in the same way, where you're going to be identifying the last bearish candle before structure was broken to the upside. So in this case, this high was broken, and then we've identified this order block right over here, and as you can see, price came back into this level and rejected off it nicely. Now, to take things a step further, as you can see, these order blocks are pretty much random. You can identify order blocks in any price action randomly from the highs or the bottoms, but to increase the probability of these order blocks actually holding and being valid, you need to make sure you're following the most recent and the current order blocks, which will act as the strongest ones. So what I mean by this is, if I clear out all this mess on the charts, currently if you look at the price note over here at 1960.300, this is the most current level of supply, which is going to be acting as an order block. Now, if price breaks above this level, this order block is now invalid. However, if price comes back into this level and shows us signs of weakness, then we can expect a higher chance of price pushing back off of it. So in this case, you would want to highlight the last opposite candle, which will be this volume candle right over here. And as you can see, once price came into it, we manipulated these high points right over here. Price broke above, closed back above, and then immediately closed back below. Again, we got a 50% retracement before that further push down, as we can see on gold happening right now. So the reason I've come about highlighting this level right over here as the strongest level of supply and acting as a strong order block is due to the most recent price action. So if you go through price action altogether, starting from this point over here, you can see price was in a downtrend, forming lower lows and lower highs, and at this point price bottomed out, forming a double bottom, followed by another push up, breaking structure to the upside. However, as you can see, price was currently respecting this order block right over here. So at this point, everything after this is to be ignored. Everything before it, at this point, this will be the most recent and strongest level of supply, which will be acting as our order block, drawn out nice and neatly. And as you can see, price came up, gave us a bunch of weakness before finally failing at this level and then breaking to the upside. So from that point onwards, if you continue down, marking out the trend, you can see price then eventually broke to the upside, and then we came back and retested this order block, which now will be acting as our most current and most recent and the strongest order block. And this is because this has now become invalid since price action has violated that level. So we can get rid of this, and now this is our most recent and current order block. So we don't really want to be worrying about previous order blocks that were in play, as they are now invalid. Another important thing to highlight with order blocks, unlike support and resistance, the more it's retested, the weaker it gets. And right over here, it's a prime example. Price came back and tapped into this order block before giving us a nice reaction. We tapped it for a second time, but then eventually we ended up breaking through, and the reactions were slower and slower, and the market was more so in a consolidation at this point, because what we would really ideally want to expect is that push up followed by the retracement and then a further higher high being created. But since we was getting multiple taps of this order block, this level of demand, price became weaker and weaker and was not able to give us that new leg to form to the upside. So continuing down this road, we can see, if I catch up to where I was previously, this is currently the most recent level of demand and our current strongest order block. And then price continued to consolidate, nothing much was happening until this critical point right over here. At this point, price action gathered enough volume to finally be able to break below these low points right over here, which is now an invalid level. And now this level right over here at 1960.300, this will be the most recent and strongest order block that's currently in play. And as you can see, I discussed how we can exactly capitalize off this in the course and how exactly we'll be looking to take entries. But as you can see, this is a huge volume bar right over here, which will contain a lot of volume once price comes back and mitigates it. So you can see once we got a huge Maribozu candle coming into this level of supply, price then slowed down, gave us weakness, manipulated the highs, followed by that push down, which we're currently seeing play out. So in summary, we can conclude that order blocks are drawn from the last opposite candle before the push breaking structure. And it's also important to note, the more times an order block is tested, the weaker it gets and the lower the probability of getting a sustainable reaction off of that level to continue forming a new leg to the upside, as I showed you guys in the charts. Now before I wrap up this video, it's always important to make sure that you're also testing out what I've showed you on the charts from my experience and see and back test it for yourself to gain that confidence to be able to take trades off of those levels. Now again, there is another layer, another dynamic which comes into it, which are the entries, which are very critical to get the timing right and making sure you're not getting manipulated out of the markets, which is discussed more in detail in the course. But as for now, these are little snippets which you guys can use to improve your trading. So I hope you guys did enjoy this video. If you did, be sure to drop a like, subscribe if you haven't already, and I'll see you guys next time.